What I'm describing in Bitcoin is actually bad for humanity. And the risk that we run is the concentration of political power that is created by the wealth that is concentrated in the few Bitcoin holders at this point is actually influencing our political framework to lower the outcomes for all of us. If money becomes too scarce under a gold standard, there's actually an incentive structure that is built in. Money too scarce under a gold standard means the price of gold is high relative to everything else. Therefore, I devote society's resources to making more gold.
Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but are limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Encompass More Asset Management LLC is a registered investment advisor with the U.S. Securities and Exchange Commission and only transacts business in states where it is properly registered or is excluded or exempted from registration requirements.
Hey everyone, welcome back to another episode of the Ducharme Wealth Management Podcast. I am joined today by a friend of mine, Mike Green. And if you've clicked on this, you are probably interested in the Bitcoin conversation. Bitcoin, as of today, has been on quite a run recently. A lot of talk in the media, and a lot of people feel like it might be their ticket to wealth and glory in the future. And we just did a podcast recently, if you've listened to the Aaron Olson episode, that he lays out a good case for why that's Aaron's perspective. Mike doesn't share the same perspective. Mike's a CFA and has done a lot of very impressive research projects throughout his career and has a very interesting take on Bitcoin. And so I don't want to spoil it for anyone. And I think it's fair to let Mike share his perspective. So Mike, I if it's okay with you, let's jump right in, and I'll let you kind of take the journey from where you think we need to start with it.
Most of the confusion around Bitcoin comes from this phrase that it's like digital gold. It is a wealth preservation vehicle, not a transaction vehicle. Now, whether that is true or not is somewhat irrelevant to what is the current narrative. Where the first place to start is actually probably trying to understand what gold actually is. And that's important if you're going to have this conversation. So I often try to start with that, and I often try to start first by actually just sharing a very simple picture. Give me 2 seconds here. And pulling up the periodic table of elements, because that's really what you have to start out with, is understanding that what gold actually is simply a metallic element. Basically, there is no idea that gold is money per se. What it is it literally is periodic element number 79 on the periodic table. And the really key thing to understand is that there's nothing unique about it, right? Everything that is in this column, nickel, copper, palladium, silver, gold, and platinum, have all been used at various times. And even things like zinc, for example, have occasionally been used as coinage. And so our association with them as money is actually simply coming from their physical properties as members of a particular class of elements that carry properties that suit them particularly well for coinage. In particular, we're familiar with pennies as copper, silver for various coins, nickels for nickels. Tin plays a role there as well as in various forms of alloys. But the really critical component for gold was that it was very useful as an anti-counterfeiting tool, because you could mint it and you knew exactly what it weighed because it's an element. It's not some bizarre combination of things. And therefore, it's very easy to simply have scales weigh the gold and say, yes, I have received what was advertised. It was used and adopted by sovereigns, first in Lydia and ancient Greece, where they had copious quantities of gold and silver that were easily mined, to create coinage that carried through over time. And where it became particularly valuable during the gold standard was as trade routes opened up. And as you would trade as an American or as a British citizen with other countries around the world, you wanted to basically have a guarantee that whatever you got paid, you could then convert back into your own currency. So gold standard was simply a mechanism by which many countries agreed that they would limit their printing of money or their issuance of coinage to what could be backed by gold, or the coins themselves would actually be gold or silver that could then be exchanged, melted down, and turned into the taxable coin of the realm, which is really all they were doing. It was a mechanism of tax collection. It was a mechanism of creating coinage that facilitated trade. There's nothing magical about it. And in fact, I would highlight that metals that used to be very precious and valued much more than gold, for example, aluminum, as technology emerged to make those much cheaper and much easier to manufacture, suddenly they became effectively byproducts. We don't even think twice about the value of the aluminum content of a drinking can. It used to be a precious metal. It was used by Napoleon as tokens that were an extraordinary gift or reward to be given an aluminum coin. So, once you understand that there's nothing particularly magical about gold, and interestingly enough, by the way, a lot of the fusion technology that is now being pushed forward has a mechanism for creating gold from mercury, which is right next to it on the periodic table. If you bombard irradiated mercury with additional neutrons, you'll eventually have it deplete itself down to the stable isotope of gold. At that point, the price of gold will fall dramatically because it becomes a byproduct to a process, and we will produce gold effectively as a byproduct of energy production. That means that the quantity of gold that is available will expand. And we've seen this happen in prior periods, like the 1849 gold rush in the United States or the Klondike gold rush, et cetera. These are all periods in time in which the quantity of gold expanded. And in a gold framework, that actually contributed to quote unquote inflationary conditions as you expanded the quantity of gold that was actually available. That's what gold is, right?
Mhm.
Bitcoin bears no resemblance to that in any mechanism other than scarcity. And even there, it actually is an inferior asset to gold for precisely the reason that people think it's superior, which is the quantity of Bitcoin that is actually available. Let me flip to a different screen here. So the key difference with Bitcoin is actually what people assign the value to the most, which is the absolute quantity of scarceness. And so this is just a programmatic component that comes out of the way Bitcoin is designed, that there's only supposed to be 21 million coins released in aggregate. Now we've released almost 20 million of those already.
Mhm.
And so this is the quantity of Bitcoin that is outstanding overall. This is the Bitcoin price. Um, the reason why this actually matters is because a flexible monetary system, while it is undesirable if it is corrupt, in other words, if money is printed simply whenever the government wants it, or when friends of the government, or let's use the word king, right? When the friends of the king want more money, does the king simply reduce the quantity of gold per coin and give it off to his friends, debasing it in the process? Gold had a protection against that. The weight of the coin actually mattered and would influence how things would trade. Bitcoin's approach to that is to simply say, we will never create additional tokens. You can be very confident that Bitcoin is ultimately going to be limited at 21 million. Now, where that creates a problem is because one, human population expands and new entrants into the marketplace are born with a lack of endowment of either money or Bitcoin or anything else. And so they start out in a scenario in which they are extremely poor relative to the existing holders. The mechanism for how that is solved is people get jobs and they're paid out of other people's holdings of that money or those resources. But importantly, we can expand the quantity of money so that there is a relatively constant proportion on a per capita basis. Or we can use flexible approaches tied to business cycles. We call that the credit function, in which banks make available currency that otherwise would not be available, expecting you to pay that back in the future. That's possible to do in a system in which the quantity of money is expanding because the projects that you enter into are effectively making a claim against future coins that are actually available or future money. That limits defaults. It limits the burden of credit. And a lot of people will look at that and say, well, wait a second, the problem is we have too much debt. The issue, of course, is that your debt is somebody else's asset. And if what you're actually saying is, I don't have the money to pay back the debt that I have, or I doubt that other people have the money to pay back the debt that they have, then you enter into what's called a default cycle, in which the value of that credit that you have taken on or that debt that you have taken on falls to a recoverable level. We call those losses, right? In Bitcoin space, those losses are so built into the actual system itself that you encounter a permanently deflationary environment. And that permanently deflationary environment simply means that Bitcoin gets more and more expensive relative to everything else. In other words, it becomes harder and harder to catch up. That manifests itself effectively in a permanent deflationary environment in which we restrict our access to debt. Now, that sounds again like a positive until you start thinking about it in your own life. How do you buy a house? How do you buy a car? Right? You're by definition taking on an obligation that you're going to pay off into the future. You're capitalizing your shelter cost or you're capitalizing your transit costs, and your objective is to make more value out of those or to realize positive value from those. That makes it relatively easy for you to pay it back. In a Bitcoin denominated world, everything would fall in value. So your future effort would actually be worth fewer Bitcoin, not more Bitcoin. And as a result, paying back that Bitcoin derived loan becomes impossible. It cuts off a tool that is absolutely necessary for young people in particular, which is part of the great irony. Right? They see it as an asset that is going to appreciate. But the reality is that it is cutting off a tool that is most particularly used by young people to obtain the capital goods and requirements that they have to live an effective life in modern society.
If you're in a permanently deflationary cycle and you want to buy a house in a world in which you have to borrow Bitcoin to buy a house, and I don't know, like I'm just say, so a house today is 5 Bitcoin. And so I would have to try to go to somebody and say, hey, I want to borrow 5 Bitcoin. But the problem is it's deflationary. And so what you're saying is actually by the time you pay that loan off, you really
your house is worth 2 Bitcoin, right? So you have now had to figure out how to obtain, let's just make life simple and say we put a 3% interest rate on this Bitcoin over the course of a 30-year life. In that mortgage, right? I'm going to end up, even at 3%, having to pay something like 7.5 Bitcoin. How? Right now, that Bitcoin is worth 7 houses, or 3.5 houses. Why in the world would I actually pay back that Bitcoin rather than just defaulting?
Well, I think the argument a lot of people would have is like, well, that's why you don't buy real estate. You just hold Bitcoin, right? I think that's kind of which
is exactly the point, right? What you have created is an asset that has its highest value not from utility but simply from holding it. That was never the purpose of gold, right? People speculate in gold today, and as I said, if the quantity of gold increases dramatically, the price of gold will fall relative to that, right? That actually allows you to solve a problem in society. If money becomes too scarce under a gold standard, there's actually an incentive structure that is built in. Money too scarce under a gold standard means the price of gold is high relative to everything else. Therefore, I devote society's resources to making more gold, right? Whether that's getting a mine, whether that's changing technology, whether that's using fusion reactors to convert irradiated mercury into gold is actually irrelevant to the process. There is a mechanism that allows me to solve a higher price of money that doesn't exist in Bitcoin.
So is it the same fundamental issue of why, the Keynesian thought framework around the macroeconomic condition is inflation greases the wheels of the economy and make sure that there's this incentive to save money, right? Like what's the point of me buying a house this year if I just can save money and I know it's going to be cheaper next year? Why would I buy a car and support that economic activity if I can just save? I don't have to do anything with the money. I don't have to take any risk. I can just hold cash and everything around me just gets cheaper. It's the same.
It's absolutely correct. Impulse. And I hope you enjoy pushing your limited number of belongings around in a shopping cart, right? You need the shelter. This is exactly why it is so caustic to young people in particular, because what you are doing when you borrow money is you are agreeing to a contractual amount that I'm going to pay in a go forward period in which I expect to be making more money, not less, right? In a Bitcoin framework, not only would the price of houses fall, but the price of my labor would fall as well. As a result, the only people who win in a Bitcoin system are those who already hold the Bitcoin. And to the point that I was making at the very start, we've already put out 19.8 million of the 21 million Bitcoin that will ever be in existence. Right? In other words, those who have it, if we continue to promote this system, simply become a new form of entitled aristocracy living off of the land that was effectively granted to them by the king. Was it a function of their skill? Absolutely. They were wonderful at politicking. They were wonderful at raising forces to conquer local territories, and the king has bought them off with land and titles. Bitcoin is the same phenomenon. It is a system that naturally consolidates power and wealth to a single individual. And that is actually exactly what we are seeing. We are seeing the Gini coefficient, or the measure of wealth inequality, in even within the Bitcoin world, just continues to get higher and higher and higher. It is far more unequal than the system that we have today.
Okay. So how far does something like that have to play out though before, like, in order for that to really become the case, do you have to go to a Bitcoin denominated world? Right.
Well, if you don't go to a Bitcoin denominated world, right, then the question becomes, how do I actually lay claim to other people's resources in exchange for Bitcoin? Because what you're actually defining there is a world in which Bitcoin is just another rock, right? Is there anything unique about Bitcoin at that point, other than the belief that it stores value? No. Right? I can copy and paste and create a brand new Bitcoin standard. The US government could do it, and create the same quantity. Remember, the entire budget, the security budget associated with Bitcoin at this point, is somewhere in the neighborhood of $7 billion that is being spent to conduct the mining operations, which are really actually accounting operations, to ensure that the Bitcoin is accurately represented on the blockchain. That's not a lot of money, right? And we actually know that that value, as they reduce the quantity of Bitcoin that gets mined, that is expected to be replaced by transaction value. That transaction value has failed to materialize.
How so?
Literally, the quantity of transactions that are occurring on the Bitcoin network have not risen in over 7 years. We're running at the same level of transaction activity on the Bitcoin network as we did 7 years ago, because we gave up on the idea of a peer-to-peer payment system, and we transmogrified it into this argument that it's just going to become a store of wealth. What that really did was simply tell people, hodl. Right now, that's a great strategy as long as money keeps flowing into the system. And that is the other thing that is really critical to understand about Bitcoin. The price of Bitcoin is not a mystery, right? We actually know exactly what is driving the behavior of the price of Bitcoin at this point, which is buying from entities like MicroStrategy or other individuals. Pretty straightforward. But what's crazy about it is just how predictable it actually is in terms of just the flows into things like ETFs. So this is just looking at the relationship between the 1 month change in the quantity of Bitcoin held in funds like ETFs and the change in the price of Bitcoin. And we're literally running right on that line. Like, we know exactly what should be happening to Bitcoin, for the very simple reason that BlackRock has decided 3 years after Larry Fink declared that Bitcoin was poison, they have now decided that it belongs as 1% of model portfolios. That means money has been flowing in, and in particular, it's been flowing into IBIT, the BlackRock Bitcoin Trust. That has been what's powering the price move in Bitcoin. If they try to sell, if the holdings fall, then the price of Bitcoin falls. Right? It is inevitably or inherently Ponzi-like, and that the only value that accrues from Bitcoin is what somebody else is willing to pay you for it.
In the crypto community, or I hear it called like the greater fool theory, right? Not to say that that has
No,
Bitcoin as a
and
fool,
and,
but
and, and
that's
and
the
that is exactly what it is, right? The fact that they themselves refer to it that way tells you something, right? What they're inherently pointing to is that there is no value to this other than the belief in number go up.
and so you're saying that essentially it's because it no longer has a utility. It just the transition from Bitcoin will be the future of payments and transactions to Bitcoin is now the future of
Gold,
hodling
right?
gold.
Yeah.
Yeah. So when the utility it went from daily utility to it's just a store of value. That's sort of when Bitcoin, for lack of better phrasing and more intellectual thought here, it lost its magic.
Yeah, I mean,
Okay.
it was an interesting idea, and it
Mhm.
has garnered extraordinary support from people who are very pleased to have seen the value of their Bitcoin holdings rise. They are dependent on other people continuing to buy it. And what is beginning to change is we're introducing more and more situations in which Bitcoin is effectively underwritten by fiat debt, whether this is MicroStrategy issuing debt to buy Bitcoin, or now issuing preferred stock that carries a 9% dividend to buy Bitcoin. In the case of MicroStrategy, this is amazing when you really think about it. What they have decided to do is take a business that was effectively non-existent. Their software business has been slowly dying and failing to produce any growth, and they decided to deploy their funds, the available cash that they had, into Bitcoin, and then borrow and lever to do that. Now, the process of doing that has helped to drive the price of Bitcoin higher. But suddenly, MicroStrategy as a company now has a cash obligation in the neighborhood of $500 million a year that it is going to have to pay when it only generates negative cash flow of about $10 million, right? The manner in which they expect to be able to achieve those sales is by selling more equity to more people so they can buy more Bitcoin. But part of the use of those proceeds from selling that equity will be to repay the existing investors who are buying the preferred stock that is being used to buy Bitcoin, right? So it is effectively just it is a pure Ponzi scheme in its underlying structure. It has deep similarities to the types of closed-end funds that existed in the 1920s, what were called unit investment trusts, in which they would sell stock. The issuer of that unit trust would receive the proceeds from the sale of that stock. They would go out and buy companies and then issue additional shares to buy those same companies and point to the performance. This is the phenomenon that drove ARK in terms of its growth and its performance, that drove it to extraordinary levels. As people put money into the ARK funds, they simply bought what ARK already held. As they became larger and larger of a share of that buying activity, the performance of the stocks that they held became increasingly dependent on their ability to raise additional funds. When that slowed, ARK crashed. MicroStrategy is setting itself up for the same underlying component, except the crazy thing now is that they are pitching these products, these things like these perpetual preferreds, to unaware investors as an equivalent of a money market fund, an incredibly low volatility asset. These are not money market funds. These are extraordinarily risky vehicles that have their value and the ability to repay them completely dependent upon that price of Bitcoin.
And that's a derivative of the company MicroStrategy doesn't produce a meaningful profit, can't pay this dividend obligation that a preferred share has this dividend obligation built in contractually to the
Correct.
share issuance. And so the only way for them to do, and their main asset, Bitcoin, doesn't have a yield. It doesn't have that utility component to it. There's nothing you can do with the Bitcoin to produce more Bitcoin, right?
Correct.
So
Bitcoin does not sexually reproduce.
yes. So this is not at all how I was thinking about it, but I'm glad you clarified. Um, well, I guess what I'm saying is like there's no business activity to Bitcoin, right? There, you can't. The only way to generate cash to pay a 9% dividend yield on a preferred share is to either sell the Bitcoin that you are professing to buy and hodl, and this is what drives the excitement around your entire business model at this point, or you have to, yeah, like you said, issue more shares of stock, issue more convertible debt just in order to raise cash, not actually at this point any longer to buy more Bitcoin, but to pay the dividend you contractually owe the investors. Is that, am I
Yeah, I mean,
understanding that correctly?
yes. So the vehicles that are being issued are the equivalent of what we used to call death spiral converts,
Hmm.
where effectively an interest rate needs to be paid in order to maintain that value. As the value of the stock price falls, or more accurate, even more painful would simply be MicroStrategy falls in value to the point that it is valued at its debt plus the Bitcoin. There is no incremental value that can be created there. I now have to meet the obligation that I've already entered into by selling stock. And theoretically, I have to sell more stock at a lower price in order to buy more Bitcoin to keep the price of Bitcoin rising, or at least at a level that I don't induce distress. And that's what you have created is a system in which you are now actually synthetically expanding the quantity of Bitcoin. If people treat MicroStrategy as an alternative to Bitcoin, this is exactly that mechanism. We're basically saying, okay, we're going to fractionally lend to MicroStrategy because their business model, which consists of buying Bitcoin, is somehow inherently more profitable than the actual process of just buying Bitcoin. It's a silly argument. It's a silly logic. But the simple reality is that Michael Saylor has managed to convince an awful lot of people.
So you've done a lot of research around the regulatory framework that has led to a lot of concerns in the structural makeup of the markets from the passive indexation side of the market.
Mhm.
Kind of through some of that same lens and framework, do you think that some of this is being driven by, hey, there's excitement around Bitcoin because of this disinflationary impulse built into the system? People want to have it because the price is going up, and hey, nothing makes people want to have an asset quite like it going up, and chart goes lower, left, upper, right. I want to own, right? That's kind of the,
Mhm.
um, and so you look at institutions, and if you look at your marginal mutual fund manager out there, and they say, well, gee, there's an asset out there that's really juicing the markets and capturing a lot of attention, Bitcoin, but my prospectus doesn't say anything about being able to buy Bitcoin, but I sure can buy common stock that's listed on US exchanges. So I add MicroStrategy to the portfolio for this essentially Bitcoin. You're trying to buy Bitcoin, but you can't because in your regulatory documents or framework or prospectus or whatever it is, you can't. So you do that. So, or you're a fixed income manager, but now you can buy preferred shares, or you can buy the convertible debt and get this quasi exposure. And so at an institutional level, it's sort of getting pumped from that angle. And then it has this, I would think it kind of has some of that same inelasticity because of the limited supply, just like index funds when everyone wants them.
No, that's actually the perfect analogy, right? If I am raising funds to buy Bitcoin and I decide that I want to go buy Coca-Cola stock instead, I'm in violation of my fiduciary standard, right? I told you I was going to do X. I have to do X, or I can get sued. Um, one of the interesting things I would highlight is Bitcoin prices retreated in the past couple of days. Why? Right? MicroStrategy has ostensibly raised $2.5 billion to go buy more Bitcoin. Well, the irony is that those fund managers that you're talking about that may be buying the preferred stock, if they're going to buy the preferred stock, what they're actually going to make sure is that they have hedged themselves in their underlying exposure, and they recognize that Bitcoin is the key risk. So they are going to effectively delta hedge their exposure to that Bitcoin in most circumstances. And that's the beauty of MicroStrategy issuing at a premium to the underlying Bitcoin is I can turn around and short that equity, or I can short that preferred and be protected against the risk that Bitcoin prices go higher by buying that Bitcoin in advance of entering into any trade relationship that I have with MicroStrategy, where effectively I'd just be trying to isolate the excess value that MicroStrategy has put in, or that it is trading over and above. The second component is like, why are other people marketing this? Well, it's the golden rule, right? Not referring to gold, although it does refer back to it, but he who has the money sets the rules. In the case of a firm like BlackRock, their change of heart is very, very straightforward. You've got a $75 billion ETF now charging 25 basis points. That's actually making them more money than their S&P 500 ETF. It's pretty crazy when you think about it, right? Like there is a clear profit incentive to push this out, and it can all be covered under the framework of, well, I mean, who really knows, right? And I want to be very clear, like I have structured my arguments in a logical fashion to illustrate the problems associated with the Bitcoin approach or the Bitcoin network. But the simple reality is it has exactly the elasticity that you're describing. So as more people believe that there's value that can be created here, or as more people believe in the magic rock, right, it ultimately can drive the price higher if supply is limited. But it doesn't actually create any value, right? There is no real wealth that is being generated here. It's a transfer system that transfers your wealth to the holders of Bitcoin.
So, there's the old the old saying: if you're not in a recession, you're heading towards one, right? Right, and that's the difference, right? And it's just some other cliche sayings. Another one is well, I don't know. There's a lot of them that are coming to mind at the moment, but essentially, I guess what it comes down to is how long does it take for the deflationary impulse to really, kick in? What's a catalyst there where hey, this is run its course so long that, hey, there's only 6 people that have Bitcoin at this point. So now no one really wants it because no one can ever have it. So now we won't price anything in Bitcoin. And now, there really is
and then Bitcoin
no
becomes
intrinsic
worthless,
value.
right?
But until that point, that's kind of like your
I completely agree. It's exactly like passive, right? I mean, the reality is the system continues going until there's too little energy being introduced into the system. Or you can think about energy into a depleting system as a loading factor or a force. The lights that I have on in my house right now will stop if I stop the flow of electricity to them. The price of Bitcoin will go down if I stop the flow of incremental funds.
a function of the inelasticity of it.
That's literally all it is. Like that's
And in
why
this
I
case,
started off by showing the price behavior of Bitcoin can be perfectly explained by the money flowing into Bitcoin ETFs. This is a far tighter relationship than we can draw for individual equities, right? Again, you're familiar with my work around how passive funds can cause markets to rise simply by people moving from active strategies to passive strategies. That's not just my theory at this point. There's a white paper by Jiang and Ho Jiang, I believe is his name, at Michigan State that walks through exactly this in the stock market, right? Explains exactly how this happens. Simple reality is that larger stocks are less elastic. Incremental contributions of capital to them in proportion to the way they're held within passive indices causes their price to rise more than other stocks. That in turn creates a narrative that says, hey, NVIDIA is worth whatever we want, or Microsoft is worth whatever we want. They will just never go down. Eventually, they will, because the people that hold them will want to start consuming the wealth that exists. And Bitcoin is no different in that framework. We've just managed to convince an amazing number of people that they should continue to hodl their Bitcoin rather than spend the wealth that has been accumulated from it.
So I think that if I'm understanding the framework on this right, and I really run this scenario forward in my head, the difference though is when, so if you look at the stock market and you look at, this passive, let's call it the passive index bubble, it is growing and it's inelastic. And at some point, it snaps, right? When the PE multiple in the S&P 500 is at 900 and everyone says, this is okay. All right. I'm out now. I'm going to move to some nice safe bonds and enjoy my retirement or whatever it might be. It snaps back, but it snaps back to the point that, hey, Microsoft is trading at a PE of 8 or something, because at the end of the day, Microsoft is still a business that is providing economic activity. People work there, right? It is part of a economic ecosystem that is producing real things in the real economy, right? And I just use Microsoft as an example, but that's sort of all companies that are profitable and have some kind of intrinsic value to it. When Bitcoin snaps back, there's no backstop here. Am I understanding this kind of correctly?
Well, the backstop that has traditionally been created by Bitcoin has actually been native to the Bitcoin community, has been entities like Tether or others who have effectively printed money in order to buy Bitcoin and support the price. But that's not currently what appears to be going on, but that is what the historical data would suggest, that effectively there were participants within the Bitcoin system that were playing the same role as the Federal Reserve, printing money to allow more people to buy more stuff. That was the role of Tether in the system. That has been replaced by and large by the growth of Bitcoin ETFs.
Which is just constant and natural flow. So if BlackRock, if they say, hey, all model portfolio should be 1 to 3% allocated to Bitcoin. So hey, in our target date funds and everyone's 401ks, we'll just start integrating Bitcoin. It now receives the same passive flow and support that. Index
Absolutely, and the only thing you can do is buy Bitcoin, right? So at what price should we buy Bitcoin? Well, whatever the current price is, right? Because my objective is to buy Bitcoin. My objective as a fund manager running a Bitcoin fund is to buy Bitcoin. My objective as Michael Saylor is to buy Bitcoin. Why am I doing that? So that I can sell more shares of my entity so I can buy more Bitcoin, right? At some point in that process, you kind of got to ask yourself, like, okay, once we've bought all the Bitcoin, what happens next? Well, people have to spend it, right? Like, if you're ever going to move forward in this framework, you have to actually be able to have people spend the proceeds into the real world. Now, you can do that when you're a very small portion of the financial system, right? You're effectively saying, hey, I've got a relatively rare asset that people are currently valuing. I'm going to sell some of it into the demand, and I'm going to use that to purchase other stuff. That's great, right? I mean, I'm thrilled for people who have made money in Bitcoin up to this point. The problem that I have with Bitcoin is not whether or not people can make money on it. And again, if BlackRock is going to make it 50% of model portfolios, unless somebody pushes back to stop that, that will cause the price of Bitcoin to rise.
So do you think that one of the things that I'll hear people say is, hey, as Bitcoin's maturing, it's going to become less volatile, right? It's not going to have these 1,000% year returns, and that's a trade-off we're going to get because we're no longer going to have these dramatic drawdowns. However, through the framework that you're describing, I have a concern or a question. I'm kind of thinking through my head around the inelasticity of it. As the supply of Bitcoin, less of it is given to miners, right? And so there's less new supply coming to market, and the price continues to rise, and it's deflationary. So I have no incentive to sell because
let's be really clear. It's deflationary if you are in a Bitcoin system, right? If you are in a US dollar system and the price of Bitcoin rises, and the set inelasticity, again, like go back to this chart. I just want people to make sure people fully appreciate this before we move on from this point.
I guess what I'm saying from the deflationary side is like, if I go and measure what can I buy this year for my Bitcoin versus the same number of coins, what can I get next year? And I just have an expectation that because there's less Bitcoin in circulation, I'm going to have to spend less Bitcoin to get that same, USD denominated asset next year. Doesn't that make it, there's really somewhat actually of an opportunity where the price of Bitcoin, because of inelasticity, and now there is flow, there's less supply coming to market, and there's no incentive for people to bring Bitcoin to market and sell it and transact. The price of Bitcoin could really go significantly higher to really that, maybe what people would call like the blow off top, like, oh, all of a sudden it's worth an unreasonable and unimaginable amount of money. But as soon as people start trying to harvest off the gains, the inelasticity would snap it back to reality rather quick.
Yeah, so that's part of what's so interesting about this. I mean, that's why I wanted people to make sure that they understood this chart, right? So this is showing that if there's 50,000, let's make my life simple and use easy math. If there's 50,000 Bitcoin purchased, which is give or take $6 billion, it causes the price of Bitcoin to rise in aggregate, all Bitcoin together, the 20 million coins, again, make my life simple, the roughly $2 trillion rises by 20%. In other words, I spend $6 billion. I have quote unquote created $400 billion worth of aggregate wealth,
Hmm.
right?
Mm-hmm.
Spend another $6 billion. I can create that again. I spend another $6 billion. Actually, it's less, it's not quite that elastic because the next spend is at the higher price, et cetera. But that's what the relationship is actually telling you. So why is the price of Bitcoin going up? Because we are contributing funds into an inelastic demand curve that basically says all the other prices of Bitcoin also rise. It's not just the ones that I bought, all of them go up. That creates additional aggregate wealth. And then I can start doing things like MicroStrategy or like we're talking about now with mortgages, where I can use the value of that Bitcoin and borrow against it to obtain US dollars. So what you're actually doing is you're creating more dollars in that environment. So it's inflationary on the way up. But if it is ever actually adopted, then it becomes permanently deflationary. And that leads to the inability to use debt. And that, while it sounds great, right? Think about being a young person, what the world would look like if you didn't have access to debt. There's debt you incur to your parents in the form of, hey, I'm going to be respectful to you for providing me with shelter and education and food, et cetera. There's also debt that you accumulate for all of the capital goods that you're required, that shelter that you require, right? It sounds great. I'm just going to hold my Bitcoin and I'll sleep on everybody else's couch. Well, great, fine. Congratulations, you've managed to get your housing provided by others, right? Can you buy that house? Well, if your Bitcoin appreciates a lot, sure, you can sell your Bitcoin to somebody else, right? If they are similarly motivated, you might be able to sell it at close to the market price. But as everybody gets to that same point and basically says, you know what, I want to actually start spending some of these gains, then the process runs in reverse. This is why Ponzi schemes don't work in perpetuity. And I know people are immediately going to jump and say, yeah, but the US dollar is a Ponzi scheme. No, it's not at all. Right? Remember, the US dollar represents effectively the equity value of the United States. It is backed by our military. It basically says if you enter into a contractual relationship in dollar terms, the force behind the US government is going to make sure that you are indeed repaid for that. And our court system, our bankruptcy system, any number of international prosecutions for companies and countries that have borrowed internationally. The reason they pay is because they fear the US's ability to enforce those debt contracts. Right? In a Bitcoin world, who pays for that government? Who pays for the dispute resolution? It's presumed that it's all going to operate simply on your reputation component. But people damage their reputations all the time. Right. Again, this is why JP Morgan, when he was talking about money in his testimony in the early 1900s, was emphasizing that it was all about character and credit. Right. He would lend money to people he believed and he trusted. Why? Because he knew that they had a requirement to pay him back on a social framework. Again, you know, in a Bitcoin world, can that emerge in an online community? Can that reputation effectively become the component? But equally important, how the hell does a kid born in 2050 get one of these incredibly scarce Bitcoin to do anything? And the answer is they can't. Just try a simple thought experiment. What we're really describing is actually an elaborate game of Monopoly. There's a fixed quantity of money at the bank. There's a fixed number of properties. How does the game of Monopoly end? One person has everything. What happens if you try to enter halfway through a Monopoly game, starting at the same base as everybody else? Well, you lose. You can't win that game. The properties are already spoken for. The money is already spent. The money has already been allocated. You, congratulations, get your little $200 every time you pass go, but you have absolutely no hope of winning the game. And that's unfortunately exactly how the Bitcoin system plays out. It is anti-youth. It is anti-innovation. It's not a solution. It makes things worse.
This is always so thought provoking. So there's a saying, you know, you don't
Everyone
have to.
gets the Bitcoin at the price they deserve. Yeah.
Yeah, yeah, no, you don't have to like the rules of the game, and you'll never win by complaining about the rules. But you know, Like you don't even have to play. You don't have to want to play the game, but when it comes to the game of life, you're going to play the game, right? And so if Bitcoin is part of this game at this point, right? You sit down at that Monopoly board halfway through. What is somebody to do? What are the options? If we're in this crazy monetary regime where, what drives the excitement around Bitcoin is the idea that the US government, and candidly, all governments around the world with fiat currency, are debasing their currencies consistently. And so what is somebody to do? If we look at gold, and okay, well, gold could be debased by, mercury becoming gold, or there's a company here in St. George that is actually working with what's Elon's company, Starlink, or not Starlink, SpaceX, to mine gold out of asteroids. Right. Like, like if that ever happened, that'd be really bad for gold prices. Right.
Yes, but on the flip side of that, right? Like, let's actually just think about that example for a second. And I'm not pretending that this is actually a good business plan, right? Like what you're describing is actually an incredible advance in human society in which we're able to transit off planet and mine resources off planet.
Mm-hmm.
Right? That is a pro-innovation statement. You're creating an incentive for people to actually figure out how to escape the Earth's gravity and then return additional resources to the Earth. It's never been done before. I don't have a complaint about innovation. I think that's incredible. Right? By the way, the same technology that allows me to bring the gold back to Earth would theoretically allow me to go live in a wonderful encapsulated colony on Mars that, I basically can't ever leave my little bubble because I'll die from radiation. But gosh, what an incredible adventure that would actually be. It'd be a lot like transiting the Pacific Ocean or the Atlantic Ocean to come to North America and discovering that there are hostile tribes here that are more than happy to kill us. But gosh, look at the freedom that we got and the adventure that we got in the process. That's interesting, right? That's a good outcome. I'm not suggesting that it's good for gold, but it is good for humanity. What I'm describing in Bitcoin is actually bad for humanity. And the risk that we run is the concentration of political power that is created by the wealth that is concentrated in the few Bitcoin holders at this point is actually influencing our political framework to lower the outcomes for all of us.
The more Bitcoin becomes adopted, the worse it gets.
The worse it gets. That is unfortunately, like I encourage people
to
to
sum up this
use things
episode.
like, yeah, I mean, I encourage people to use things like LLMs to build models that actually contest this theory and just create, a model that says, hey, what happens to somebody who's born in 2050 under a Bitcoin framework? And the answer is they're impoverished. That
Unless
doesn't
mom and dad have
feel
enough
like the
Bitcoin to give you.
objective. I'm sorry, say that again.
Unless mom and dad have enough Bitcoin to give you.
Unless mom and dad have enough Bitcoin. And so really what we're engaged in is basically a form of fantasy prepping, right? The end of the world is coming. I'm going to make sure I have enough canned food and dehydrated food and a storage facility. And I'm going to look after myself. And oh, by the way, I'm going to own this Bitcoin stuff because that's a way of prepping for the end of time, right? Okay, great. But that is not a societally good outcome for people to plan and prepare for the end of society in aggregate instead of raising the value for everyone else. What we've fallen to is we've entered into a period of effectively financial nihilism. And again, I think that passive is a huge component of it because what we've really done with our current 401k system and the bias towards passive investing is we've designated a particular type of investment that receives special treatment, right? It's viewed as safe and appropriate for you to buy the S&P 500. Is it viewed as safe and appropriate for you to use tax-deferred dollars easily to invest in your buddy's business that you have a lot of interest in? No, that's not allowed. Is it a good idea to do that? I have no idea. But you know what? It's not the government's job to tell me what the right investment is. And yet, ironically, that's exactly what all the Bitcoiners want now. They want the government to mandate that everybody else has to buy their Bitcoin.
Via the institutional adoption through Bitcoin ETFs.
Or I mean, be more explicit about it, right? Through a conversion of Bitcoin to legal tender, which is the government exchange, instead of saying we're going to give a qualified default investment alternative status to passive investing in the form of target date funds in a 401k, which shields you from liability as the offerer of the 401k and creates a tax advantage method of investing in the largest publicly traded companies that really don't even need your money, right? We're giving them a differential cost of capital in that framework. If I declare that Bitcoin is legal tender,
Mhm.
then I have actually endowed it with a power that nothing else has, and that can only come from the government. And so again, like for all the talk that this is, shrinking the power of the government type vehicle, look at what they're actually doing,
In order for the price
right?
to
They're
keep going up.
advocating for it to become legal tender. You will be forced to accept their Bitcoin.
Yeah, that's an interesting framework.
It's not a framework. I mean,
Well,
it really is. It's just an observation of what is actually happening here.
oh, Mike, you always leave me a little speechless.
Well,
It's a lot to think about.
you got me in a Hawaiian shirt, so it's a trade-off.
I don't uh, it's always a lot to chew on. Every time we have a chance to do something like this. Um, but I've got some final thoughts, but I don't even really know that I candidly can share them on the podcast here. I wouldn't want them to be construed as investment advice, so I'll reserve
Yeah,
that for
no,
after
that's always
recording.
dangerous. And again, I want to emphasize, right? I mean, it's the same phenomenon that we're seeing with passive investing. If money continues to flow in, it will cause the price to go up. That will make you feel good about your investment in Bitcoin. But at the end of the day, if your investment in Bitcoin makes society worse off, I don't see why you would be excited to do that. Like, I get it. I understand that we are currently in a period
Well,
in which the individual rights seem to take precedence over everybody else.
yeah, I think that's the Gordon Gekko framework, right? Greed is good. So if I'm seeking my own best interest, and I believe the price of Bitcoin goes up, then I choose to buy, right? And I think what you're
And and and, and,
highlighting.
and yeah, and so what Gordon Gekko was actually highlighting in that speech, right, is that greed incentivizes people to
Yeah.
to make choices that improve their individual outcomes,
Mm-hmm.
right? That overall is good. But we also recognize that we need a system of laws to prevent those actions that could make you better off from harming other people in the process. And it's very hard to figure that out in something as esoteric and intangible as Bitcoin, right? Because you have to play the system through to understand how it ends up. And at every step in the process, you're basically faced with all the evidence telling you the exact opposite, right? The price is going up. It must have value associated with it.
Mm-hmm.
But we actually know exactly what's causing the price to go up, right? And it's not that it's generating value, it's that it's generating speculation.
I think we should cut it here before I start jumping down the rabbit hole of stuff that could be misconstrued as advice.
Yeah, well, and again, I want to emphasize that it's a good place to stop because you don't want to necessarily give investment advice. People often accuse me of hating index funds or hating Bitcoin, et cetera. I'm not trying to hate anything. I'm just trying to understand it.
Yeah. Well, I think that what you understand, you can make investment decisions around, right? So
That's where it has to start, right? And so again, like, can the price of Bitcoin go higher? Absolutely, and we've outlined the mechanisms by which it can. Can the price of Bitcoin go much, much lower? Yes. That is the expected outcome from the system. In the same way that the minute you walk away from that monopoly game, the monopoly money is worthless in the real world, right? It allowed you to win this game, but it's worthless in the real world.
I think the takeaway there is you got to figure out what game you want to play, and you got to play that game.
I think that's absolutely correct. And so if your listeners are very talented market timers and they're perfectly capable of taking the risk associated with their Bitcoin, I think that's great. Go for it. On the flip side of the equation, I strongly encourage people to think long and hard about a system that requires you to issue a quantity of debt in order to obtain that Bitcoin in the expectation that the price of Bitcoin would rise further. Because if the price of Bitcoin does not rise, then I have to pay that debt. And this is the challenge that MicroStrategy is ultimately going to face. At some point, people will say, we're not going to take your stock. right? And you have to make those cash payments that you've committed to. And the only path for that for them will eventually be selling that Bitcoin, which will then fall in price, which in turn means that those debt obligations will not be met, and people will be left significantly worse off.
I'm gonna have to do some reading on preferreds. I've got some ideas, and
There's very
brushing up on
few
preferreds.
new things under the sun. There are some genuine innovations that are going on, right? You've heard me talk about digital tokens and tokenization of securities, and I actually think a lot of this stuff is really, really powerful. It's stuff I'm actually currently working on. But that's probably a conversation for another day. Ultimately, the speculation in Bitcoin has introduced people to crypto or the idea of cryptography, and the idea of scarce assets or definable and immutable assets in their character. I think that's great. I really do. But what I'm really looking forward to is the world of digital tokenization and the ability to create securities that deliver real value to people.
Yeah.
And that's going to come in the next couple of years.
Yeah, I've said that about like NFTs. People at first the NFT is, do you own the JPEG, the rights of the JPEG of a monkey?
Yep.
And the answer to that is no. From a disclosure standpoint, I own no JPEGs of monkeys. From a legal standpoint, I own no NFTs. However, it'd be really interesting if I own an NFT that said, "Hey, my car in the driveway, I own it. Here's the legal title, and we don't have to go down to the DMV for me to transfer the title to you. It's on the blockchain, and I can send it to your wallet, and you can own the." Via owning this digital asset that is tied to owning this real physical asset, right? In the real world, just as the tokenization of that JPEG is represented by owning the NFT, right? That the token itself.
Yeah, I mean, effectively, what you're describing with NFTs or digital tokens is that you are moving from a paper-based world where the policeman shows up and says, "Show me your license and registration." In the future, that'll be in truly digital form,
Yeah.
right? And if you get a suspended license, it'll automatically mark itself as suspended. If you're not making the payments on your car will automatically not start. These things that sound terrible, and in some ways they're incredibly intrusive, but the efficiency that is gained in that process actually means that there's going to be less losses and less frictional losses in the societal framework, which lowers the cost of car ownership, which lowers the cost of enforcement of driving, which lowers the cost of insurance, et cetera. Most people are experiencing rising insurance costs in automobiles right now. There's two sources to that. One is that automobile prices have been inflated because of the inflation associated with the COVID pandemic and the stimulus associated with it. And the second component is that more and more people can't afford insurance, and so they're not driving with insurance. So your insurance company finds itself liable for an accident that you were not at fault for, because somebody does have to pay for that, right? A digital token system that reduces that quantity of crime or bad behavior, driving without insurance, is going to lower costs for everybody involved in the system. Again, that creates real value, not what we're seeing in the Bitcoin space.
It's a really interesting paradigm that I have tried to figure out a really effective way to explain to people, but we live in this both inflationary and deflationary world.
I think that is well said. I think that's very well said.
Well, everyone thinks I'm crazy when I say it because like a couple of years ago, inflation was like printing at 9% on the CPI prints, right? And is very fresh in everyone's mind, inflation running hot and prices appreciating. So, going up so much and groceries cost so much more. The trip to the grocery store is so astronomically more expensive than it was 5-6 years ago. And so when you say, we live in a deflationary world, people think like, well, you're crazy and wrong. Have you not seen this inflation? And the example that I generally point to is, yes, but when's the last time you bought a TV? When's the last time you priced out a 55-inch TV? And by the way, what would that have costed you 10, 15 years ago, right? Because now you can order one on Amazon for $200. It shows up the next day. And 10 years ago, it would have been $1,000 or $1,500 and quite a luxury, right? That was something to display in your home as a symbol of wealth or status almost. A 55-inch TV screen when I was growing up was a big thing for families to have. Now it's, I bought 4 of them a couple of years ago for my office, right? And so that's the deflationary effect of technology. And I think that's what you're describing, right? Is although a lot of the maybe the price of assets may go up, or goods and commodities might go up, some things will still be coming down and come down quite significantly, like maybe the cost of insurance through the tokenization, right? That technology
Well, the cost
implementation.
of insurance, but much more importantly, and this goes like now we're into a much more theoretical framework,
Oh,
right? But if you think about what most people describe as inflation, that's because they're strictly thinking about it in dollar terms. They're not thinking about it in terms of time that you spend obtaining it.
mm-hmm.
You take yourself back 150 years ago. If you were married and living in a household, your wife would spend 4 hours out of her day simply obtaining the water that was necessary for your home, boiling it so that you could cook and drink it, and doing laundry and cleaning your house nonstop, etc. Technology has allowed those costs to collapse. Right, the cost of entertainment used to require you getting in your covered wagon and going to the local town, and there you could see a theater production performed by the local villagers. Right, today I can turn on my 55-inch TV or 65-inch TV that is also, my daughter actually just moved into her first apartment, and she has a 65-inch TV that costs $275. Right, like obscenely inexpensive, and with that she can access entertainment that is
Yeah.
created all over the world across any period of time, not just what happens to be playing at the local theater.
Mm-hmm.
Right, so our lives are so much richer, and we are so much wealthier in terms of the surplus that we have and the choices that exist for us and the ways we get to spend our time. Right, most of us are trapped on our phones scrolling on a continuous basis. Imagine trying to do that on the plains of Africa, where you are spending a sizable fraction of your time simply trying to avoid lions. It doesn't mix well, right? Staring at your phone in
Yeah.
the wilderness is not a good idea. So, I understand that people have experienced the inflation that we went through in the aftermath of the pandemic. We again know why that occurred. We shut down the world. We gave everybody money so that they didn't have to work. We then reopened the world and basically said, oh, you can have everything you want. Right. Well, unsurprisingly, when given additional resources to buy things, people who were constrained in prior periods decided they wanted them. Um, what we're really describing is a system in which many of the things that we want are slightly harder to get than they were just a couple of years ago, but relative to 50 years ago or 100 years ago, they're fantastically easy to obtain.
Mm-hmm.
You know, a cave in Paleolithic times was really cheap until you factored in the cost of the loss of the tribesmen who had to fight the cave bear that occupied the cave, give their lives for that, so that the rest of the tribe could actually have that cave going forward. I'm sorry, showing up to a house closing is not that big of a deal relative to that. And we talk about this in prior periods of significant social change. It was the best of times, it was the worst of times.
Mm-hmm.
It just depends on who you are. If this is Jeff Bezos, it's unquestionably the best of times, right? If you are somebody who was barely getting by before, and you're suddenly confronted with far less support from the government and far higher expenses, it feels like the worst of times.
Yeah.
Right, but it's really neither. It's just this time.
Well, everything goes in cycles, and anyways, I think the thought that kept coming into my head as you were talking was, my grandpa when I was a kid, he'd always used to tell me how he bought his first car for $17.
Yep,
You know,
he got a great deal. I bought my first car for $350.
yeah, his is a
So
Ford Model A for $17. And yeah, and he used to tell us that for good fun, they used to play bumper cars. They would drive around
yep.
town and try to ram each other's bumpers and chase each other. Which probably gave some rise to the original insurance industry a little bit, but
Well, the insurance industry, as we think about it in automobiles, like again, these are all things that we take for granted,
Yeah.
right? And we tend to imagine that the world that was perfect was a world in which we all got into our cars and we drove to the local mall and we went and bought stuff at Macy's. But the proof is in the pudding. We still have cars, we still have malls, we still have Macy's, and nobody uses the car to go to the mall to go to Macy's because they get a better experience from Amazon.
But now you can get in your car and it can drive you to Macy's, so you don't even have to think about that side of it. So that's technology benefit there.
You're saying the car could drive itself to Macy's.
Yeah. Yeah.
But in all seriousness, like remember that what department stores really were they were a form of entertainment, right? It was a logistic solution I need to go to one place to buy as many things as possible. This store has lots of different departments that sell women's clothes and men's clothes and electronics and home goods, etc. Right? And I can go to that store. Like again, you're probably a little too young to remember this, but like Christmas time used to be a time when you would go to Macy's because they would have what was new and wonderful. The Neiman Marcus gift catalog you would look at, the
Yeah.
Toys R Us catalog you would look at, and you say, "Oh my gosh, if only I could have that, then
Yeah.
my life would be perfect." Right? Now that shows up in less than 24 hours and bought at a fraction of the wealth that your parents had to spend to buy those toys, to the point that I looked at the toys that I grew up with as a child. I had very few of them. I had very few books. I had I
Hmm.
basically had to entertain myself by multi-purposing almost everything. Look at I don't know how many of your listeners have young children, but look at their toy boxes. They're overflowing.
Hmm.
Half our time is trying to figure out what they don't want anymore and they're never going to use anymore so we can give it to somebody else and get it the hell out of our house. Just like we want that 35-inch Sony Trinitron that was a status symbol in 1992. Get that out of my house.
Changing times.
Yeah, no,
Uh,
and again, like part of the point that I'm trying to emphasize is that there is nothing particularly unique about this time. It's just a new time, right? And so there's lots of narratives that exist that explain exactly how the world is going to develop going forward. I got to be honest with you, that's way beyond my pay grade. I don't know how the world is going to end up, but I can tell you how a programmatic system like Bitcoin is going to ultimately play out.
Ultimately, but it goes back to if you're not in a recession, you're heading towards one. There's the difference between inevitable and imminent, right?
Yes, absolutely correct. And this is one of the points that I just continually emphasize is that we can't possibly know what is imminent versus inevitable. It is always a function of the stochastic pricing of it. Right? What are the
Yeah.
odds that it ends relatively soon?
Hmm.
The higher the odds of that recession, by the way, the higher the odds that it ends relatively soon.
So you're okay to connect those dots really quick. You're just saying that the higher the odds of a recession, the higher the odds of the inevitable end of uh,
Many of
high
this,
Bitcoin
many,
prices
yeah, exactly.
or
It
whatever.
becomes much harder to hodl when you need the money.
Well, you need the money, so maybe you have to really have the tough conversation with yourself about selling. But also, even if you are hodling, you're I kind of say sometimes if you're, when you're holding index funds, or you're holding Bitcoin, they always say like, well, you don't have any, there's no counterparty risk. And I kind of like, but if you're hodling, your counterparty risk is the other hodlers, right? Because if they start selling, then your price goes down and your value gets degraded.
Yeah, I encourage people,
But
like, if you want to see the model for Bitcoin, go watch the movie, the GameStop movie, right?
it,
At the end
it,
of the day, what caused the price of GameStop to fall? People decided, you know what, I gotta sell. I gotta take advantage of this wealth.
well, and to bring it full circle to your recession comment is if the flows stop, if people stop buying and continuing to push the price up, and the flows reverse, then that's when things get messy. We'll say.
Yeah, I mean, that is effectively what it boils down to,
Yeah.
right? And um, we will see how Bitcoin plays out, but I just encourage people, there's the phrase, do your own research. Run a Bitcoin program, right? Actually think about it in the logical sense. What happens if there are 9 billion people in the world? In other words, a billion more people and less than 500,000 additional Bitcoin available for all of them, right? The answer is very straightforward. Either the price of Bitcoin goes to infinity, in which all the resources of society are focused on building this ridiculous thing, or it's not actually worth anything because nobody is willing to take it anymore.
Uh, yeah. Range of outcomes, I suppose.
Yeah, I mean, look,
It's quite the range.
the simple reality is that you can walk through the math of the system,
Yeah.
and it doesn't work. It started as a payment system. It has failed as a payment system. It was transmogrified by proponents into a store of wealth. It fails as a store of wealth because ultimately it's not producing value, and value is what ultimately drives wealth. There's the Warren Buffett expression or Ben Graham expression: in the long term, the market is a voting machine. People are voting enthusiastically for Bitcoin right now. In the long term, it's a weighing machine. And there is nothing in the Bitcoin community that can be weighed.
In the short term, it's a voting machine. In the long term, it's a weighing machine.
Yeah.
The weight is the intrinsic value, and the voting side is the price action.
Yeah, the current price action. Yeah.
Current price action. And this reinforces my framework that I remind people is that Warren Buffett and Benjamin Graham and these guys, they're still market timers. They're still traders, in my opinion, longer term in nature, but they really prescribed a mean reversion, which is the price action or the voting machine is going to revert back to the weight of the asset or the intrinsic value. Right.
And I want to be very clear. Like, again, people hear me talk about passive and the fact that it can elevate prices for an extended period of time over and above their fundamental value. This is part of the reason why you hear value investors screaming, because by and large, they're salty. They've been tossed to the sidelines and they don't have the capacity to exercise the vote anymore because they've already sold all the stuff that people care about. Right? What are they going to do? Go buy it? Well, that would just reinforce the price behavior that we're already seeing. Yeah. So they're largely sidelined in this process. But eventually that weighing does reassert itself. And that could be 20 years from now, that could be 2 years from now, it could be next Tuesday. We can't possibly know when it's going to happen. And so when we talk about the market timing components of it, it all just boils down to what's the effective probability of these various components. The minute you saw that BlackRock was adding Bitcoin to model portfolios, it was very clear that the price of Bitcoin would rise as a function of that. Once they're done, I don't see how it rises. I mean, does somebody else adopt it? Somebody as big as BlackRock? Does Vanguard now switch over and decide? Right? These are all things that can help. But at the end of the day, you're talking more and more resources and energy dumped into a system that doesn't actually produce anything.
Right. But if it's in the model portfolios and there's still consistent flows into the model portfolios, then although they've adopted
this is I mean, again, Brendan, this is the irony of the system, right?
Yeah.
The system can be dead and not actually make any value and still rise in price. Just like, MicroStrategy can be incredibly overvalued. Or if you and I were to decide to wash trade between ourselves, some form of unlisted security, right? I could buy it from you for $100. You could buy it from me for 101. I can buy it from you for 102. You can buy it from me for 103. And if we're only transacting in a single share, right, of the million shares that you and I have issued, we're causing the price to go up 1,000,000-fold relative to the price transactions that we're engaged in. Have we created any value with our transactions? No.
Intrinsic asset valuation. I think if we go down that rabbit hole, I'm definitely going to have more people comment and say they don't know what we're talking about.
I agree. And so again, we've probably extended past our welcome there. So let's take our Hawaiian shirts and leave everybody else alone for a little bit.
Casual Friday. Yeah, welcome to Bitcoin Casual Friday with Mike Green, some Hawaiian shirts, and the end of the world in finance. So.
But I don't think that's the case. I emphasize for people over and over again, there is no end game. Part of the problem is that right now we are exhibiting the same sort of societal behaviors that accompany what's called millennialism, right? We're convinced that this is the end of the world, that we are so important that it just happens to happen during our lifetimes. It's almost the perfect model for millennials, right? They were so special. They were told they were so special from day one. Congratulations, you exist at the end of humanity, right? The collapse of the fiat system. It's here. It's in your lifetime. It's just, it's an incredibly egotistical expression.
I don't know that I'll ever buy into that one, truthfully. And the reason why is because Bitcoin, as far as I know, does not have any nuclear submarines. And so until that happens, that'll be my signal. I think that fiat's done. Until then.
Yeah, I think we're an awful long way away. And in fact, again, I just redirect people to look at what is actually happening. The Bitcoiners have moved from being anti-government to the government has to bless our stuff because it's the future.
Yeah. Well.
All right, Brandon. Thank you very much. It's a good way to end a week.
It is a great way to end a great week. Thanks again, Mike, for all your time. For anyone that has stayed with us on the conversation, you at this point clearly have some really deep interest in the topic. I really suggest you check out Mike's work around passive investing. Mike can be found various places online, but a great spot that I think people should pick it up is on X at Professor Plum.
Prof Plum. Prof Plum 99. PROFPLUM 99.
Prof Plum.
And
99.
confusingly, for those who are not already on there and following me, my avatar is Vicini from The Princess Bride. So if you are looking for it, that's where you'll find it.
So anywhere else that people should find you?
My Substack, yes, I give a fig, is regular writing. I also contribute to Tier 1, which I know that you are also a subscriber to. Tier 1 is market structure analysis, primarily focused around the dynamics of option structures. And look for a book on passive investing later this year.
Yeah, I am eager to get a copy of that when it comes out. So
me too.
Yeah. Anyways, well, thanks again, Mike. It's always great having you on, and we'll see everyone out there. Any questions, follow-up questions, whatever, hit me up in the comments, email us, reach out. We'd love to hear from you and get those questions answered for you. So thanks again, Mike, and thanks for everyone sticking with us through what I think was a really interesting episode.